Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Welcome back to the Massive Passive Cash Flow podcast. I'm Gary Wilson, your host, and I'm glad to have you back. If you wouldn't mind, if you could please do so, is go ahead and subscribe to the podcast. It's on 30 different channels, including Apple, which is, of course, the biggie. But you pick the one you want. And while you're out there, please visit globalinvestoragent.com. These are real estate agents that are not typical real estate agents. Okay, they can help you buy and sell your own home, but they're also specially trained to work with real estate investors, which is how I got started. So they know how to identify, analyze, negotiate on and off market deals. And if you are an agent and you realize you need to take this and make this part of your model because the market's shifting, visit the site too. There's a place for you to put in your name and email and see what it's all about. So in any case, without further ado, we got a great guest today all the way from Indiana, Mariusz Skonieczny. I hope I got that close, Mariusz. And we're going to talk about microcap investing, okay? Unique subject, and I definitely want you to pay attention. If you're driving, later on, you'll have to listen to it again and look at the show notes. If you're not driving, take notes. So, Mariusz, thank you so much, man, for joining us. This is an awesome subject, and I'm so glad we got you,
Yeah, thanks for joining me. Thanks for having me.
You're welcome. Hey, if you wouldn't mind, I have some questions I want to ask you, but if you could start off, just give us an idea of how you ended up in this business sector. I mean, what was the kind of paint a picture for us, if you don't mind,
Well, I am in this sector, microcap stocks, for one reason only. I don't have a lot of competition there. Mm-hmm. Most people don't know this sector even exists. The financial industry doesn't want you to get close to it. Hedge funds can't invest in it because they're too big, and that's it. Little competition. Anytime there's little competition in anything, the efforts that you put into it generate higher returns. Mm-hmm. I mean, you can, if you are in real estate, and if you think about you are the buyer, you want to buy a piece of property. Do you want to have a lot of people lined up trying to buy it with you, or do you want to be the only one at the table? Mm-hmm. That's really what it boils down to. And when I put it into the real estate terms, people are like, of course I want to be the only one. I want to be the only one bidding. But when you take the same thing into stocks, people want to buy stocks when everybody and their brother wants to buy stocks. They don't see anything different, but it is not different. And so that's why I'm in this sector, because nobody else wants to be in it.
Well, and that's actually a really good point you make here, and I certainly appreciate it. I know, like in my current business model that I built 3 years ago, we have a team of real estate agents that just focus on investing. That's what we do, and no other team is like it out there that we've been able to locate. It's a national team, and we grew from scratch to being in 36 states because of that. Because it was like a brand new category. There was no competition. So what is it? Why do you think the financial industry, and maybe the financial industry doesn't like microcap companies? And if that's so, why, and why are they ignored? And how is this making this possible for you to do this?
Well, let's first define microcap companies. So when you have again a house, you have an equity in a house, and when you have a mortgage, you have mortgage and equity, right? Or debt and equity, and in total, that's the value of the property. Well, it's no different for businesses. You can have equity, and if there is no debt on a business, then the entire business is the equity. And if the equity portion is what trades on a stock market, it's the equity. And if all of the shares added up together, they trade for, let's say, less than $100 million, then that's considered a microcap. And different people might use different definitions, might say, well, it has to be below 50 million. Well, it doesn't matter. Like if it's not in the billions, if it's, less than 100 million or less than 50 or whatever number you want to use, that's considered a microcap. So why does the financial industry doesn't want to go there? Well, for two reasons. One is financial industry, they are in the business of acquiring assets under management. If you speak to financial advisors or hedge funds, how do they make money? Well, they accumulate assets under management, and then they make a percentage, whether it's 1% or like hedge funds 2% and maybe 20% of the profits. They are in the business of accumulating assets. So if they are managing billions of dollars, then it doesn't make sense for them to go after the small companies, because they would have to get hundreds and thousands of them to be able to fit all of their clients into it. It just doesn't make any economical sense. So they have to go for the big companies. They have to go for the Microsofts, for the Apples, for the Teslas, because it's easier for them. They can just buy as much as they want for all of their clients without really moving the stock price. And then the second reason is that smaller companies, especially younger ones, they might not be mature enough to be profitable yet. And they might not be mature enough to be on a reputable exchange, such as NASDAQ or New York Stock Exchange. So they're more risky and they are more volatile, and they tend to trade on the secondary exchanges, not NASDAQ, but maybe Canadian Stock Exchange or Toronto Stock Exchange Venture. And even not a lot of brokers want to deal with those exchanges. I mean, the other day, I got an email from my broker saying that the brokerage wants to close my account. Just had no reason. I didn't do anything wrong. They want to close my account because they look at my portfolio and it's all microcap stocks, and they don't want to deal with people like this. So it's just, those reasons is that the industry just doesn't want to go there. So because of this, and I would say that 80 to 90% of the companies that do trade on those exchanges, they are something that I wouldn't even touch, because they are maybe too early, or maybe they are in a business that I have no interest in, like gold and silver, or they're trying to find a cure for cancer and I don't know anything about it. So I would eliminate 80 to 90% of them. But then there is 10 to 20% that are like real businesses that are solving real problems, that have something real special, and they are growing, and they're going to become big. And they are eventually going to be on NASDAQ, where everybody's going to see them. And I am able to study them, get access to the CEOs, to the management, way before anybody finds out about them. And, again, no competition. I might get a very favorable price, especially today, where the Federal Reserve raised interest rates for like 10 times in a row, crushed the small cap stocks, and now those microcap companies are selling for song. It's unbelievable. I've never seen anything like this.
Yeah. Well, I'll tell you what as far as returns, it seems to me like you would be able to be more selective with the microcaps for the reasons you gave. And as a result, you're able to focus on the best of the best. So is it safe to assume that generally we can get better returns in the microcap market than we can in, the other like blue chips and the ones that we generally hear about on the news? Or is that I know we probably can't give people specific numbers, unless we can, that'd be great. But it seems to me like it'd be easier because you can be more flexible and more nimble. Is that generally the case?
You have the opportunity to generate life-changing returns where you don't have that in the big names, but you also have to go through serious drawdowns. So, for example, since 2009, I was able to turn 10,000 into 7 million, but then last year I'm down 5. Yeah. So who likes to be down from 7 to 2?
Right.
Okay. And they're good companies doing good things. It doesn't matter. I still got whacked. So that's another reason why people don't want to be in it, because of the volatility. They can't handle this. And, and I'm always very open about it, because I have people that, let's say, heard about what I've done, and then they wanted to be part of it. And then they came in when everything was hot, when NFTs, when people were paying $1 million for pictures of monkeys, they wanted to come in because it sounded great. And now they're down 80%. Right. And they don't know what to do. And, sometimes when you're down so much money, you might have made a mistake, or sometimes it's just a better opportunity, and nobody can answer this for you. You have to yourself look at the businesses that you own, the stocks of businesses that you own, and figure it out if you made a mistake or if it's a once in a lifetime opportunity.
Yeah. Well, I think I'm understanding now too, when it comes to the traditional, investment industry, it seems like it's really set up for mediocrity because of the same reasons you just gave. In their minds, the microcap market is just way too volatile. You can have the wide swings, and they're dealing with, probably millions and millions of customers. And of course, they have to juggle, the big stocks who are generally, they're mature, they're not going to be going up and down as much. Is that a fair assessment that the traditional investment industry is pretty much set up for mediocre returns, and that's why people are saying, hey, you can only get 10% on average?
Absolutely. I like to use it as an example of, think of a 100-meter dash in track and field, and it's the sumo wrestlers that are racing. And then all the financial industry are like, oh, the sumo wrestler, it took him 5 minutes to run 100 meters. And then they're completely ignoring the Usain Bolt, because the sumo wrestlers are the hedge funds, the mutual funds, the big fat entities. And they're focusing on that. And they don't even know that individuals that want to roll up their sleeves, they have huge advantages of just because they're not big. Because they're not big, they can go into these spaces with $10,000, $100,000 and make great returns. I mean, it's no different. It's no different than in real estate. Let's say you have a hedge fund that has to buy real estate, in the billions. Well, you can go into this specific neighborhood, specific street, and find a special situation. This house. I mean, a house that I live in 2014. It was a unique situation that the seller wanted to sell in the winter, and he was so stubborn. He didn't want to list it with a realtor. And we looked at the house. We made an offer without even seeing the property. It was so obvious. And we bought it for like 140, 2014. Today it's probably worth 300,000. Nice. But it's those specific instances where it doesn't matter if you do it in stocks or in real estate, whether you go to a courthouse and dig out some documents that somebody is in rears on this or that, or, on the screen, it looks like this, but then when you go in person, you realize, whoa, this property doesn't need as much work as it seems through the pictures. It's the same.
Right. Yeah. Yeah, I agree. It was kind of leading to the next thing. I before I got into real estate investing, and I've actually been investing since I got out of college, but I was in banking for almost 18 years and learned a lot about money just by going to the bank's corporate library every day at lunch. Instead of going out to eat or whatever, and this was a big bank, I'd go to the corporate library. I had access to everything and studied a lot. And what I realized is, I was doing well because I had access to the information. Most consumers don't. And I also realized a lot of general consumers are unsuccessful. I mean, why do you think that is? I mean, as the general public, like you and I, can do well, but most people, it's like you gave the example of the NFTs. It seems like by the time they get the news, that this is a new big thing. It's already too late. It's matures, or it's like a firecracker that goes off, and once it goes off, it's done.
Because
What would you say?
people pay attention to things that are 3 inches in front of their face.
Yeah,
That's it. They can't think for themselves. They have to be, they have to be cuddled, and they're comfortable. They're comfortable investing when other people are with them, holding their hand, and they want to. Again, they want to invest in NFTs when they hear about it, and then when you step back, you're like, hold on a second, you paying this much money for a picture of a monkey? Are you insane? Like, what's this monkey going to do for you?
right.
They told me it was a status symbol. Oh, I'm buying. It's a status symbol. Status symbol. You're an idiot. That's what it is. Oh, or all these cryptos. Like what are you buying? Oh, this is the future. Like, okay, but you were an idiot. You were an idiot if you thought otherwise.
Yeah. Well, let's say the word gets out. I mean, obviously, hopefully, the podcast will appeal to a lot of people, and I'm sure it will. But is there any risk, or is there any downside? A lot of people discovering, maybe probably because of this, the benefit of being in microcap investing, or is it really not a concern? Because, like, I know from my experience in teaching, I could tell a room of 100 people exactly how to do something. Maybe one will end up doing it long term. And what are your thoughts on that? As far as, is there any chance or risk that the microcap market could get overwhelmed? Say, like in a market shift, and people are looking for a place to go with their money. We'll be right back with the Massive Passive Cash Flow podcast after I invite you to Monday Night Live. Every Monday night, 7 p.m. Eastern, I teach a class without fail for you on subjects ranging from flipping to buying rentals, managing rentals, wholesaling, commercial, creative purchasing techniques, analyzing properties, identifying properties, hundreds and hundreds and hundreds of subjects. And if you are a licensee, if you have a real estate license, you should definitely tap in, because there are a lot of investor agents also in the class. Many of them are on the global investor agent team. So you can learn from them, as well as from me, how to actually work with investors correctly and profitably. All right, we'll see you Monday night. The link is in the show notes. Go ahead and register. We'll get right to the Massive Passive Cash Flow podcast.
No, I don't think there's a risk of the space getting overwhelmed. No, because hedge funds are never going to go in towards it. There's no room for it. But I don't like to talk in terms of a entire market. I couldn't care less what the entire market is doing. I'm just accessing this market to access particular businesses. The risk for me is if I'm wrong on the business, I'm going to lose money. And then on top of it, I can lose money on paper when the market turns, like it did, because the Fed raised interest rates 10 times, pulled the liquidity out of the system, and now we went from people paying millions of dollars for pictures of monkeys to now not wanting to buy real businesses with real futures. They don't want to buy anything right now.
Yep.
That's where we went. That's where we went from. So now the question to you is, how did it turn out when they wanted to pay millions of dollars for pictures of monkey, and how do you think it's going to turn out to those who want to buy real things with real problem solvers that are selling for songs right now?
Right. Yeah.
Warren Buffett said, be fearful when others are greedy, and be greedy when others are fearful. Right? I kind of adjusted that, and I like to say, be fearful when others are greedy, and be greedy when others are stupid.
Yeah. Yeah. It is definitely it's still today. A week doesn't go by without there being some report of him in the news online. So let's talk. So one thing Warren Buffett's good at is obviously finding value buys. But so when it comes to these public companies, particularly the small cap ones, the micro cap ones, obviously you really can't trust what the public is saying. But how do you get information on these? What are some of your favorite ways of getting information on these microcap companies?
Well, if they're public, they have to issue their financial statements.
Mm-hmm.
So you can read the financial statements, but you can, when they're small enough, you can get access to the management. You can talk to the CEO. You can visit them, and they're going to talk to you. Unlike the CEO of Microsoft, would never get a minute out of a person like this. But with these smaller companies, you can get the CEO on the phone. You can visit the company. I visit my companies all the time. But then, you don't just want to listen to what the management is saying, because they're always going to be positive. You have to roll up your sleeves and talk to people. Talk to the competitors. Talk to clients. Ask them, why are you using this product? What's so special about it? Maybe if it's a product that you can buy yourself, buy the product yourself and see what's so different about it. Just like what you would do in real estate. When you buy an apartment building, you go and call the rent comps in the area to find out what the market rent is. You go and drive the area to see if it's safe, see if you want to live there or not. You're not just going to take the information from the owner and ask if it's a great idea to buy the property from him, right? You're going to check up if he paid his taxes. I remember one time I was interested in, I didn't go through it, but I was in the middle of buying a mobile home park in one of the cities in Texas, and it looked great on paper. I took a trip to the city, and I went to the city hall, and I found out that the city turned off utilities from the entire park. The owner didn't pay utilities for months. There was no electricity, and he was delivering water to his residents in jugs of water. You think he told me that on the phone?
Right.
But you do these things. It doesn't matter if it's a microcap or whatever. You roll up your sleeves and you find out what you get yourself into. And the advantage of investing in these smaller companies is that they don't have any analysts. They're too small. So you can have an informational advantage over other investors, where you can't really have that kind of advantage when you invest in, Apple. I mean, what are you going to find out about Apple that other people don't know? Oh, they sell cell phones. Okay, great, good for you. So I can go to an Apple store and look at the computers and all that. It doesn't give me any advantage at all. So all my efforts, if I wanted to study Apple or Microsoft, all the effort that I put into get me very little return, get me very little extra benefit. But if I do the same kind of work with those smaller companies, that gives me advantage.
Yeah. Really what it comes down to is it sounds like somebody's just got to roll up their sleeves. It can be good old fashioned hard work, which is usually the case in all success. But really, in your case, it doesn't have to be the consumers. I mean, I guess people can, the way you do this, can people work with you directly if they want to invest in small cap and invest with you? How does that work?
Well, I have a website called MicroCapExplosions.com, where it's like a membership website. Mm-hmm. And I introduce various different ideas to my members that I find interesting. I tell them which ones I'm invested in, and they can make their own choices as to what they want to invest in. But it's their choice. But I always tell people that, like, look, there's periods of times that hard work doesn't necessarily equate returns. Like, if we go back 12 months, it doesn't matter how much work I put into these companies. Doesn't matter how many times I talked to the CEO, how many times I visited the company. I'm still down, 70% on my position. It doesn't matter how hard I work. So I always say, like, if you want to do what I do, first of all, realize that your hard work over time will pay off. But if the market goes against you and the market goes from buying monkeys to not wanting to buy anything, no matter what you do, you're going to be down. So don't scream to me. Just realize I told you this right from the beginning.
Yeah. So let me go back there. I'm just trying to find this So this is this at classicvalueinvestors.com, or is there another link?
That's my old website.
Okay.
MicroCap Explosions with an S.com.
Okay, I'm going to write this one down because we'll make sure that gets into the show notes. MicroCap Explosions.com.
Yeah.
Okay. Now, I want people to recognize too. I mean, what you're doing is real investing, and it does take work. I mean, I back in when I was actively doing that with the stock market, granted, I was in more of the mainstream stuff, and the returns were kind of mediocre. But what you're doing, it's the same. You still have to do the same effort, and but what it's not is it's not trading. In fact, would you mind explaining and tell people the difference between trading and investing? Because I think they get confused. Trade. If you wouldn't mind just expanding a little bit, because I think that's an important distinction to make with people.
Well, I mean, let's say you have an orange, right? An orange. You can buy an orange or resell the orange. You haven't done anything to that orange, and you resell it. It's like you're trading it because you haven't added any value to it. But if you take the orange and you make a salad out of it or some smoothie out of it, you enhanced it. So in investing, you can buy a stock and you can resell it tomorrow for a tiny profit because you looked at the chart and some computer program told you to do this. You're not really going to make a lot of money on that because nothing really has changed fundamentally with the company. But if you can buy a company for one price and then during the time that you hold it, the company expanded or got more clients, or maybe you as an investor helped the company grow because you injected capital directly into them, then you can expect maybe make some serious money. Or let's say if you buy a small company on an unknown exchange that nobody has heard of, you buy yourself a position, you hold it for 5 to 7 years, they grow, get more clients, become serious, and then they move up to NASDAQ, where now they have this huge exposure. Now they get all these analysts covering them. You can expect to make more money, It's kind of, again, like buying a beat up single family home, fixing it up, buying it directly from the owner, and then fixing it up. Painting it, doing nice landscaping, and then hiring a broker that can get you huge exposure. You didn't just trade, you enhanced it, and then you also gave it more exposure than when you were buying it, versus just flipping it. Flipping it is more like trading because you haven't done really anything to it.
Right. Yeah. Well, another good thing I like about this too is, believe me, I like real estate. I've been involved in real estate my entire life, but it is the upside is it's tangible. It's a brick and mortar asset, the tangible asset that generates revenue. The challenge is it's a tangible asset. It means it's physical. It has systems that have to be maintained: electrical, plumbing, roofing, HVAC, the whole 9 yards. But with these companies doing it like this, I'm not really geographically bound. I don't have a big maintenance and repair part of my model. But what are some, can anybody, if somebody's listening to this in Canada, for example, or if we have listeners in Europe and Africa too, parts of Asia, can they participate in this? Does it matter if they're not U.S. citizens? Can they participate with you and getting involved with these microcap companies, excuse me?
Yeah, we have people from all over the world: Germany, Netherlands, China, US, Canada, everywhere. Okay. As long as you have a brokerage account, you can. As long as you have a brokerage account that has access to international exchanges, then yeah.
Okay. And what about timing? This is always, I get this question a lot. Even when people I teach a class every Monday night called Monday Night Live, and people will come on as a guest, and it's especially lately because all the real estate values have gone up dramatically. The interest rates that you have to have on borrowing money has gone up, and the stock market, while it definitely took a dive in the pandemic, it came back up, and it took another dive probably beginning of last year, and it came up again. It's sort of doing that same pattern. It sort of teeters right before we have a big correction. And I'm not asking you to time the market. I know that's extremely difficult, and we don't really advocate either. But what's your gut telling you as far as trending go? Are we going to see more micro-cap companies coming up that are available? We're going to see fewer, or what do you think in the future holds for us here in this sector?
I don't really think in those terms. Like, I just find the companies that I like, I look through a lot of them and I choose the ones that I think have products that solve real problems, that have futures. And I don't really think about them in totality, or how many of them are going to be there. What's going to be the value assigned by the market to the entire totality. Yeah. I just think of them as businesses. And as long as we have people in this world, we need things. We need things to get done for us, right? Like, we need to eat, we need to fix our roofs, our cars break down, and because of our needs, we have all these problems. And then businesses are there to solve our problems. So as long as there's problems, there's going to be problem solvers. And I'm not going to say I'm only going to be buying problem solvers when the times are good. I'm always going to be buying them. When the stock market is hot, or when everybody wants to invest in things, you most likely have to pay more money for those businesses. And when times are like bad now, where people don't want to invest, you can get those problem solving companies for pennies on a dollar.
Yeah. Well, what I like about what you're doing is that part of it is you actually have experience in real estate investing too in your early days, and so you can compare. And it's like two different things. I mean, there's a lot of similarities, but two different demands on your time, energy, and money. And I know we're getting short on time here, but I want to ask you: is there anything we didn't talk about you think we should mention, or anything you want to suggest to the listeners? I want to give them the website again too, MicroCapExplosions.com, and they can just go on there and look and see what you're investing in. And
well, that's a paid website. I think the best way to follow me is just to take my impossible to pronounce name, put it into YouTube, and you'll find my YouTube channel, and I talk about some of those companies there. That's how I would say get an introduction to the free YouTube channel, and then from there, if you think this is something for you, you can take the next step.
Okay. And for everybody listening, if you're driving, don't do this. Don't write it down. But if you're not driving, write this down. If you can't see it on the screen, I'm going to go ahead and give it to you. It's Mariusz. It's capital MARIUSZ, first name, last name, capital SKONIECZNY. And you can replay that part if you need to write it down. It'll be in the show notes. And I suggest you follow Mariusz on YouTube. And I always like to try things out myself too. So I'm, ironically, in the next 3 months, in a position to redeploy some assets. I'm going to be looking into this because it definitely fits. So it's a part of the puzzle that I've got, and it's one of the pieces I didn't have solved. So this is a really fortuitous and timely podcast. So Mariusz, I think I speak for a lot of people when I say thank you for joining. I appreciate your sharing your time and expertise with us.
Yeah, thanks for having me.
You're welcome. For everybody listening, thank you for participating. If you wouldn't mind, please leave a review for the podcast. Again, on whatever channel, 30 some odd channels, of course, Apple being the biggest. Leave a review because it's what makes the podcast world go round. And while you're out there, go ahead and take a look at MicroCapExplosions.com. And the third step would be to go to globalinvestoragent.com and pick yourself a real estate agent who's trained to work with you and I, the investor, real estate investor. And if you are an agent, boy, I can't emphasize enough. You may want to seriously consider checking this out based on the way things are going. So in any case, we will see you all on the next Massive Passive Cash Flow podcast. In the meantime, take care of yourselves and God bless you and your families.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.